Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. We are wrapping up our series on Social Security. We went through Social Security basics. We went through some calculations. We went through strategies for claiming as a couple. And this last one, I want to cover a few advanced topics. There are lots of advanced topics and little special nuances when we talk about things like getting divorced and remarried. There's a lot of rules around that. We're not going to cover that because that's really ultra specific. There's government pension offsets. There's all sorts of stuff that we could go into on a very detailed level on Social Security. But today we just want to talk about a couple of important items, thinking longer term about our Social Security benefits and what we could do to help enhance that, and also what we can help with the surviving spouse. We talked a little bit about surviving spouse. We talked a lot about surviving spouse in the previous episode. We're going to dive more deeply into that because we're going to talk about some tax considerations. And we already talked about some claiming considerations for protecting the surviving spouse. So we haven't talked about it also in the context of taxes. So let's dive into that. But before we get too far into the Social Security piece, let's talk about Roth IRA conversions. Regular listeners of our podcast know that we talk about this quite often. It's a great planning strategy. It's not 100% what everybody should do, but it can be very, very useful. And it also serves a purpose for Social Security planning. A Roth IRA conversion is where you take a traditional IRA and move money over to a Roth IRA. And you pay tax on that amount that you move over in the year that you're making that movement. So we have to be careful. We don't want to shove everything from the traditional over to the Roth IRA all in 1 year necessarily, because that would be a lot of income to report and could put you in really high tax brackets. But quite often, we see and we work with clients, and we do this where we are steadily converting from traditional IRA over to a Roth IRA within certain tax brackets and certain Medicare IRMA brackets, things like that. We don't want to pay a huge amount of taxes as we're converting. Otherwise, that kind of kills the point of doing it because we're trying to save on taxes over the long term. But we have a lot of clients, and we've seen a lot of people who can benefit from steadily converting from traditional IRA to Roth IRA, even though they may never fully get there just by doing the conversions. We can still see a lot of tax benefits over the long term. There's one particular client who we were able to do this. We were actually able to start pretty early and get them to where they converted all of their traditional IRA over to Roth, which is awesome. Now they're collecting Social Security and they're collecting Roth IRA benefits, which are not taxable. And that works out really, really well because for most people, Social Security is taxed. You get taxed up to 85% of the amount that you're receiving gets taxed. And that is the vast majority of people collecting Social Security have to pay those taxes. There's some confusion in the recent One Big Beautiful Bill Act. There was a misperception, and there still is a misperception, that part of that bill was Social Security is no longer taxed. That is not true. Social Security is still taxed. They made some adjustments to tax deductions, things like that, to where the total income that you are taxed on is a little bit less now because you have higher deduction amounts for a lot of seniors. But in no way did that bill eliminate the tax on Social Security. So we have to think also in terms of taxes when we're planning for the Social Security benefits that we receive. These Roth IRA conversions are one great way to do that, because we already talked about the example where we are able to get people moved all the way over into a Roth IRA even before they started collecting Social Security. That's rare because a lot of people who are retiring now, they started out saving into a traditional pre-tax savings account. In fact, a lot of people retiring now, Roth wasn't really a thing when they first started saving into retirement. And as they get older, maybe they were in their higher earning years and they didn't want to use the Roth because they needed these tax deductions now against a higher level of income. So there's lots of different reasons, but you'll see most people, I would say in general, who are retiring now have a much greater proportion in traditional IRA than they do in Roth IRA or Roth or traditional 401k versus Roth 401k. Same idea. So there aren't a lot of cases that we have seen where someone is able to take everything they have from the traditional IRA or 401k and get it over to Roth before they start collecting Social Security. Some can, and that's great. That's awesome. But most of the time, they're still converting even after collecting Social Security, maybe as they're getting into their 70s and beyond, because there's still some tax benefits to it. And it's worth doing if we evaluate things over the long term. And in that example, where people are not able to get everything converted over to a Roth IRA before they take Social Security, what can still happen if you can continually and consistently be doing these Roth IRA conversions is you could get to a point later in life. Some people, it might be in their 80s. Some people, it might be in their 90s. So you can still get to a point in life where if you leave the Roth IRA alone for the most part and continue to let that grow, and you can keep doing Roth IRA conversions and also living off of distributions from the traditional IRA, you can work that traditional IRA down to zero and get to a point where your assets are entirely in the Roth IRA and growing from that point. And that becomes a huge benefit for Social Security planning, because let's say you're able to do this by the time you get to 85. You've been converting a little by little over to the Roth and you're just letting it sit there, letting it grow. And in the meantime, you're using traditional IRA to pay for your living expenses, your required minimum distributions, all those things. And you run the traditional IRA down to zero while letting the Roth IRA grow. Let's say you get to 85 and all your money's in a Roth now. Well, the only thing you're reporting on your tax return might be the Social Security. All your income's coming from a Roth IRA, which is not taxable. It doesn't show up on your tax return. Now, later in life, in this example at 85, now you're getting to the point where Social Security is not taxed because all you're reporting on the tax return is Social Security. Everything else is coming from a tax-free Roth IRA. So doing these Roth IRA conversions, a lot of times people will think, well, I'm still going to pay tax on Social Security because I have money coming out of my traditional IRA, which is absolutely true. But you might still be able to get to a point later in life where Social Security will not be taxed. If you can get all of your money over to a Roth IRA over time, you can reach this point of no taxation on your Social Security. Plus, you won't have to worry about what if the government raises rates later on, decades down the road, because you'll have your money in a Roth IRA, which is non-taxable, and the rest will be coming from Social Security, which, if that's the only thing reported on your tax return, probably will be zero. Some people might still have a high enough Social Security benefit to give them a little bit over the threshold to where part of it might be taxed. Depends on the rules at that time, of course. So we're talking a long time from now. If you're retiring now and looking out to age 85, we might be talking about totally different rules then. But planning for the rules that we have in place now, it can absolutely be worth it to consistently be doing Roth IRA conversions over time, running the traditional IRA down to zero, and letting that Roth IRA, that tax-free Roth IRA, grow and using that for income later in life. The other portion of that, which we already talked about this in the last episode a bit, is protecting the survivor. So if one person has a very high income and has a high Social Security benefit, we talked about it being worth it for them to perhaps wait to take their benefit, because if you wait, say, from age 67 to 70, you get a higher benefit yourself. Well, then also, if something happens to the higher earner, the spouse gets to bump up to that higher benefit when that person passes away. That piece is important, but it also becomes important from a tax perspective on what we just talked about with the Roth IRA conversions. Because when one spouse passes away, you go from married filing jointly tax brackets down to single tax brackets. So there's a bit of a tax disadvantage when one spouse passes away, because indeed you have lost part of your Social Security benefit. The lower amount that you were claiming goes away, but the surviving spouse still thankfully gets to bump up to the higher benefit amount. So regardless of which person passes away, the remaining person's still claiming the higher Social Security benefit amount with tax brackets that have shifted down lower. And you might still have the exact same required distributions from a traditional IRA. So when one spouse passes away, I don't think people think about this too much because it's not fun to think about, but you actually wind up in a less advantageous tax situation in almost all cases. Nothing's ever 100%, but essentially you just go from married filing jointly tax brackets to single. It's going to be a little bit disadvantageous unless you have some really special circumstance. So doing these Roth IRA conversions and planning for how you claim the spousal benefits can make a big deal, especially later in life, if one spouse passes away significantly earlier than the other. We want to make sure that we're thinking about everything long term, not just Social Security in a silo, and certainly not just Social Security for one person in a silo if you're a married couple. Even if you're not married, we can still circle back and say, wow, this is going to be great benefit for you to continue to do Roth IRA conversions in order to potentially get to a place down the road where maybe Social Security isn't even taxed and you've taken the risk of higher tax rates off the table. So these are more advanced items. And we think about, how do we save money long term? How do we get the most out of not only Social Security, but also out of our IRAs? Combine those two together and understand that the claiming strategies and also the tax strategies between traditional IRA and Roth IRA, they all play together. And if we line this up correctly, we can have some huge benefits down the road and take a big, big risk off if we're concerned about especially tax rates possibly going up in the future. So don't think about these pieces so individually. Think about step back and think about the whole picture and where some of these opportunities are. And in particular, look at Roth IRA conversions and make sure you're protecting the surviving spouse by delaying, perhaps if you are the higher income earner,